Lead a life of entrepreneurial freedom with insights from successful creatives, entrepreneurs, and investors. Discover how they overcame challenges and turned their biggest dreams into reality. They share their personal success playbook so you can build the business and life you truly want. Welcome to Passion Millionaire, the podcast by Robert Roth. Rock and roll your dreams.
Welcome to today's episode of the Passion Millionaire Podcast. Today we have a completely different topic. It's a part of the investment sector that we're covering today with an expert in stock market. And expert means like a real expert because he's a former Wall Street executive. So he knows a lot of secrets, which I'm curious to pick from him for all of you to learn about getting better about how to invest in the stock market. Therefore, you know all the secrets that Wall Street knows that maybe Wall Street doesn't want us to know as a retail investors, right? So that will be a thing that we definitely bring up in this conversation. And as well, what is super interesting to know, Jaden has clients, Fortune 500 companies, Citigroup, Merrill Lynch, Investors Group, General Electric, many other CEOs and business owners as clients. So super excited. Jaden Sterling, welcome to the podcast.
Hey, Robert. Thanks for having me. Pleasure to be here.
Cool. Feel free to reintroduce yourself or add to the introduction as you like. Like, we want to get to know you first.
Yeah, so I will add that you're right. I was a Wall Street insider for the decade of the 90s. So for 10 years, I worked on Wall Street for some of the major brokerage firms. And from that, recognized that the industry is set up to make money off of people, not for people. And I really got my education from my wealthy clients, my millionaire clients who came into the brokerage firm. You know, back then, $1 million was a big deal. You know, today it doesn't seem like that much money, but in the 90s, it was significant. And I noticed in their portfolios, they had like a handful of stocks. You know, it was like John Deere and IBM and these really big conglomerates back then. And I noticed that their portfolios were doing really well and started to recognize that what I was being told from the brokerage firm standpoint really wasn't the way to build wealth. Rather, it was a way to sell them packaged products. You know, there's many myths on Wall Street. One is diversification. And I think Warren Buffett said it best: diversification is the tax that people pay when they don't know what they're doing. Uh-huh. So when I started to kind of piece all this together, I realized, wow, really the way to build wealth, especially generational wealth, is through investing in stocks and not mutual funds and packaged products and managed money and all the other stuff that Wall Street wants you to buy. And from that, I created software called Sterling Stock Picker to help people, which I'm sure we'll get into and I'll explain later, but to help people find winning stocks for their investment dollars.
Mm-hmm. Yeah, quite interesting. I've been on the website before as well. So definitely. I'd be curious also to learn a little bit more about your history because, you've worked in Wall Street. Like, what exactly did you do there? And why did you leave also?
I managed investment portfolios for some of the wealthiest families in the U.S., families that were in Palm Beach, Boca Raton, Florida. And when I recognized that, you know, the way to invest is in individual stocks, I started investing that way in my own portfolio. And I invested $70,000 in one of our parent companies that was during the 90s, tripled in value. And every month I just kept adding money to it. And that 70,000 grew to just under $1 million. So by the time I was 30, I had $1 million in the bank. I was ready to leave the industry. Like, I was just finished with it, realized that I'll do way better as an entrepreneur. And then knowing that my passion and mission, maybe I'll back up for a minute. When I was 14, I had an epiphany. Robert, have you ever had an epiphany?
I had one, yeah. Multiple, actually.
Oh, okay. So, when you're having an epiphany, like time stands still. And during that, I was 14, I was actually my mom's townhome, came down the stairs, and I found myself transfixed, standing in front of this boombox. Remember back in the day, you're too young. You probably don't remember what I'm talking about,
I don't
but
remember. I'm
okay.
old enough, 41
You're
now.
old. Okay. So big box on her dining room table, and it was a cassette. And I found myself just transfixed standing in front of this, and it was playing. And what was odd, no one else was home. So I'm like, well, this is interesting. So I'm standing in front of this and I'm listening to Wayne Dyer speak. And I felt three things on the inside very powerfully. I felt that I would be speaking on stages around the world. I felt that I would be teaching about money, helping people be empowered by money, not enslaved by it. And lastly, I was told, or I felt, I don't know exactly how this happened, but I knew that I would be teaching from personal experience, not from a book I read or a course that I took. So can you imagine like a 14-year whole life purpose is downloaded to you? And I followed it. It's why I went to school at American University and studied finance. It's why I then left the financial industry at 30 and developed my own real estate investment firm, built a $12.5 million firm in 7 years, and realized, man, I got to help people with this money situation. So back in 2009, I made the leap to helping people with their finances. And from that, the Stock Picker was born.
Okay, that's quite an interesting story. Wow. Thanks for sharing that. So you left Wall Street and then you continued on that journey that you have, like that you saw in your epiphany, and therefore you're here on the podcast. So I'd be super curious to also dive into, okay, what are secrets of Wall Street that you're probably also now sharing with your clients or through your software, your platform also, like how to pick the right stocks and how to treat them once you've picked them.
Yeah, so the industry, a little insider secret about the industry, it's the industry tracks the money they make off of you. It's called velocity. And what that means is they track how many times your portfolio turns over, because every time as something is bought or sold, they're making money off of you.
Right.
Yes. So when I realized that and realized that one of the best, especially back in the 90s and early 2000s, the best investment approach was buy these amazing stocks and just hold on to them. When I realized that, that's what really got me interested in learning as much as I could about investing in stocks. Even though I wasn't taught that with the brokerage firm, they teach you how to sell like package products like mutual funds and unit investment trusts and bond funds and all that other garbage. I jokingly say friends don't let friends buy bonds. They're some of the worst investments you can ever make. Except for the issuer of that bond, because they get your capital, they get to tie it up for eons and give you a little stipend called, an interest payment along the way until maturity. So,
Detailed question about that, because personally, like I think bonds can make sense at least temporarily in order to hold cash, and get some
I don't
interest.
think
So
I
you
don't
have
think
dry
they
powder in it.
I don't think they make any sense actually.
Okay.
I think people are sold that. They're sold the idea that they have to have a certain amount of bonds in their portfolio because the industry wants people to buy bonds. So what makes more sense is like a really solid dividend-paying stock.
Okay.
Mm-hmm.
So you would use that, a dividend-paying stock that you would sell once you find a better opportunity to place that capital in. Is that what you say?
I think there needs to be, I call it the base of anyone's portfolio. So there has to be a foundational base of a portfolio. So that's high quality dividend stocks and conglomerates, really big companies. Apple is one of those in our base that we recommend because it's a hybrid. It pays a small dividend, but it's also a growth stock.
But just real quick, because I think those are two different things we're talking about. Like why I would buy bonds is like, instead of I want dry powder to invest more when I find good opportunities. And then why would you hold the cash if you could have it in bonds or something that at least brings you some return, and you hold it in just for selling it whenever you need the cash, basically. So and then when you opt
Well,
into those dividend-paying stocks, then that's a different thing, though, right?
well, a bond is a long-term debt instrument. A note
T-bill.
or
That's
a T-bill
what.
is shorter
Yeah.
term. So when
Yeah.
you're referring to bonds, these are very different types of investments. And bonds, you're going to be subjected to market swings, market value swings, as you would a stock. So you're referring to putting some money capital to work in a short-term T-bill situation, which could work as long as we have a normalized yield curve and not uh, not what we have now, which is a very flat yield curve. So, yeah, either way would work. I still don't like bonds. I don't think they're a good investment, and I prefer if you're holding cash, just keep it in cash, not because you still are subjected to risk. So, very different investment vehicles depending on what you're trying to accomplish.
Okay, interesting. Well, you have inflation risk on the cash as well,
Yeah.
right?
Yep, for sure. Yeah, and you do with T-bills for sure. You very, very much so. Yeah.
Mhm. Yeah, quite interesting. Okay, cool. So then you're saying um, dividend-paying stocks, that is part of a portfolio that you would build. Maybe you can walk us through how you would build a portfolio, right? Your way.
Well, based on what I learned in the decade of the 90s from my very affluent clients, that a handful of stocks is sufficient in different asset classes. So you don't want like 8 different tech stocks or 8 different consumer staple stocks. You want to be a bit broader, diversified among the different sectors that you're invested in. And a base of a portfolio we recommend 4 to 6 companies in your base. These are companies that are solid. Like we talked about, it can be a hybrid, which is Apple, which pays a small dividend, less of about 1%, but is considered a growth stock. So that would work for someone. And then you would be consistently adding to those stocks every single month, dollar cost averaging, so that you're not really concerned about the fluctuations in price. If it goes down a little bit, you get to buy more shares. So that is the foundational piece. And then from there, we have a growth and accelerator portion of our recommendations. And those are like, a little more aggressive stocks. Once you receive profits in those stocks, you would funnel those profits back into the base. The key is the base. It's all about building a really solid base for your portfolio.
Hmm. So one part dividend stocks, but what other stocks would you choose in order to, if you say you have 4 to 6 stocks, can you give us an example of what
Yeah,
those other stocks would be and what the function would be of each stock?
yeah. I mean, it's again, this is not financial advice. This is purely for educational purposes only. We have to say that, but our software walks someone through once they join the platform. Depending on what's going on with interest rates and the investment environment, it'll walk them through different categories of stocks that would fit not only their risk tolerance level, but also their values, personal values. We've curated. We have 60,000 stocks in our software that we follow and rank as well, and each are connected with up to 33 different personal values for people. So we're a big believer in like investing where your values lie. So like, for example, if you were interested in health and well-being, we certainly wouldn't be showing you McDonald's or Coca-Cola, right, as an investment portion. So I don't like to give specific stocks because everyone has different investment risk tolerances and as well as different values. But just know the software takes care of that for each individual.
Hmm. Okay. I still like try to understand how you build that portfolio. So dividend paying stocks, like if you have 4 to 6 stocks in there, then one of them is a dividend paying stock.
If you have 4 to 6 in your base, half would be dividend paying stocks. Yeah. The other half
Okay.
would be like large conglomerates, companies that are do business around the world. So if there's a certain slowdown in North America, maybe in other countries, things are still performing well. So you would broaden your exposure to companies that have a much larger revenue model than just a backyard company.
Hmm. So basically, all of those companies that you be buying all of the 4 to 6 would be really large companies like
Yes.
Apple or of that size, similar size.
Yeah, like
Or whatever big companies are out there.
Yeah,
Not only tech.
it would be probably anywhere from 800 billion to 5 trillion in market cap at this point. Mega cap stocks. Yes.
Yeah. Okay. And what would be the investment horizon that you be thinking in?
Well, that depends on what someone's individual goals are. So, as soon as they get to the platform, they get to uh, uh, tell the software what their goals, what they want to accomplish, how long their time horizon is. Some people join and they're like, I just want 30% like last week. They want very quick returns. And if that's the case, then we're going to show that person more aggressive stocks that are poised to, perform well. Like I'm thinking right now, precious metals all the way are the way to go. The mining stocks in the precious metal sector are extremely undervalued, and I think there's a lot of opportunity there as we're recording this today.
Mm-hmm. Yeah, quite interesting. So what would be typical results that you have achieved with your clients? Because that would be interesting as well. I'm assuming that the software that you're building hopefully can bring similar results, probably with no guarantee. I mean, nobody can control the stock market, at least not us, right?
Yeah.
So I'd be curious to learn about that as well. Like what were typical results in terms of return?
Well, when someone enters our space, we start with them right away on their mindset around potential returns, because most of Wall Street tells people, hey, don't only expect average returns, like 5-8% a year. Don't expect anything big. And that's alarming, because it'd be like telling your 11-year-old child, hey, don't expect to be anything big in life. You just know you're going to be average, like we wouldn't do that. And I believe the same with money. You shouldn't do that with your money either. So my biggest hurdle with people is helping them understand that you can actually get 30% return on your money with every single stock that you buy. It's just a matter of making sure that in our system, it's poised for that type of growth. And we have a simple star ranking system, 1 to 5. 5 stars is our coveted strong buy rating for stocks. It means that we've looked at the technicals, the fundamentals, the financials, and we can highly recommend that stock. And our 5-star stocks have outperformed the indexes by an average of 65% in the previous 30 days. So we feel really confident with our 5-star rated stocks. So if someone were to show up on our platform and go, okay, I'm ready for some big returns here, and I'm open-minded, and I know that 30% is a reality and it can happen short term, then I'm going for it.
Short term, what's the time frame? Rough.
I mean, I don't know. I used our software personally. I decided at the beginning of December, I was going to buy some more real estate, but I wanted to do it with profits that I made, kind of take profits off the top of my investments. And I tripled my money in a silver mining stock over an 8-week period. So from the month of December and January, it was extraordinary. And our software indicated that it was a mining stock that was poised to take off. And it did. It did really, really well. Now, I also invest in option contracts. So I bought some April calls on that underlying stock, which are highly leveraged and outperform the individual stock by a factor of, I would say, 3. So when the stock was giving a 10% return, these option contracts were up 30%, and it worked out really, really well.
Wow. Okay. Congratulations. That sounds pretty cool.
Thanks.
And like how are those stocks rated? Like, I mean, what's the idea behind picking those exact stocks? How would you go about it? You said, okay, fundamentals, etc. But is there also an element of looking at the charts and then maybe looking at whatever 150 MA or things like that?
Yeah, we look at all the technical indicators, specifically the short, intermediate, long-term moving averages, like you mentioned. I mean, it would take me hours to sit here and explain exactly how, but we basically identified, we identified some metrics that are mostly aligned with the price movements of stocks. One is like earnings growth, for example. We look at that very closely on a year-to-year basis. We look at the current price of the stock based on their moving averages. Is it above the averages? Is it below? Like where's the money flow index? Where's the relative strength indicator? So from a technical standpoint, we look at things very closely, but also we're looking at the fundamental health of a stock, especially in this market when there's so much volatility and uncertainty. I think it's important now more than ever to make sure that you're buying stocks that are trading below their intrinsic value, for example, stocks that have levered free cash flow, so they're making money, just some basic things that are really important. Probably up until 6 months ago didn't matter because the tech stocks were just taken over. But now the fundamentals matter, the financials matter. Yeah.
Yeah. hmm Yeah, quite interesting. We have to maybe divide between software and AI stocks somehow, I believe at least. Like, how do you, think about AI stocks going forward next 5 years?
Next 5 years, huge opportunity. Right now, they're kind of in the, out of favor sector, so to speak, because they've run up so much so fast. But it's going to take over everything. AI is here to stay. It just gets better and better. I think it got, I was very much in the business in 1999 and 2000. I retired in June of 2000. So during that time, with the tech bubble, there were companies that were posting ads for technology that hadn't even been created yet. And so now we're just starting to see all that technology that is out there created, working properly, that they talked about, early 2000s. Wow. So people ask me, do I think maybe the AI stocks got a little ahead of themselves, but not by much, because the way they've sold off in the last 6 months has been overblown. And I think there's tremendous opportunity still in that in that space for sure.
Yeah, quite interesting. Also, detailed question, AI. What about crypto market? Like there are those crazy stocks out there, MicroStrategy, for example, or American Bitcoin. What do you think about those? Because that is super crazy stuff.
It is. It's funny. A year ago, my wife and I sold all our crypto and bought precious metals, silver and gold, and super glad we did. And the reason we did, because we sat down and we said, can we really explain what this does? Like, do we really know what these platforms do? And when we said, no, we don't, that determined our investment decision. And we'll never go back to investing in crypto. So that's my personal thing. MicroStrategy, you've got a CEO of that company that is so egotistical and, a year ago was telling people that Bitcoin was the only form of currency and everyone else was poor if they didn't own Bitcoin. And now he's going back on that, saying he's going to be selling his. I mean, the guy is just a nutcase, frankly. And I wouldn't touch that company with a 10-foot pole.
All right. Yeah, quite interesting. But what I'm hearing also is like, it's very personal also. Like, do you understand what you're investing in? Do you believe in it? Like that, I think the word conviction maybe is a good fit there.
Yeah.
Because I'm curious about what you say, but I personally think that if you don't understand it, or if you don't want to understand it more and more and really stand behind it, then you will make windy decisions. So maybe tomorrow you just decide, okay, it's not good anymore, and throw it out. And then maybe that's not a good way to invest. Or how do you think about that?
Well, I think you're absolutely right. I think, there's two overarching elements as an investor you're dealing with, which is the macroeconomic environment and then the personal internal environment. And with macroeconomics being what they are, we've got a failing dollar. There's a potential for the dollar to lose its worldwide reserve currency status. That is approaching more and more. It's what's driving the precious metals up. And then you've got the internal climate of, can I handle the volatility in the equity markets? Is it something that's going to shake me out, or as your word, be firmly convicted in terms of what my investment approach is? And with one example is with precious metals. I'm very confident with those. I could care less how much the market swings and the prices change. If anything, I look at a dip as a buying opportunity. And when you have the level of conviction that I do with precious metals, you'll always love a nice pullback because you'll just buy more.
Yeah, I hear you. Why the precious metals? And then maybe there's a distinction between gold, silver, and are you talking about other precious metals as well? I mean, silver potentially has more use in whatever tech, right?
Yeah.
Versus gold maybe also does have that, but there's more store of value. That's to my understanding. So I'm curious to learn how you see all of that.
Well,
And there's mining stocks, etc. So yeah, let us know how.
yeah, it's a great question. The the precious metals have been suppressed for 45 years, the prices. And if you think about that, I always thought about that price suppression as like holding a beach ball underwater. They're holding it down. Eventually it's just going to shoot right up. And we're just getting started with the precious metals rally. When you compare the metals, especially silver and gold, to the US dollar, there's never been a time in history when the fiat currency hasn't collapsed or gone away. And we don't know the fate of the US dollar. What we do know is it's lost 95% of its purchasing power over the last 45, 50 years. So when you start to recognize that a currency, they removed the gold standard in the early 70s, that affected the price of precious metals and affected basically the value of the US dollar, you have to account for that, I think, in your investment strategy. And Wall Street wants us to own companies that trade on these exchanges or bonds, like you mentioned, things like that. That's all based in the fiat currency. And that is why, and I'm, as you can tell, total contrarian. Like, I couldn't stand working for corporate America. I couldn't stand doing what they wanted me to do. That's why I got out as quickly as I could. So when I started to recognize what really works to build wealth, gold and silver, definitely a huge key in retaining your wealth. Very important. That's like if you wanted to build generational wealth, you would be buying gold. Silver for, like you said, many applications for it, from technology. Heck, silver's in Lululemon clothing. It's such an amazing technology. And again, all of the prices, copper as well. Copper's been suppressed. Platinum is just starting to break out a little bit. Palladium as well. So we've got all these precious metals that are just ripe for the picking and going to make a huge difference in someone's finances down the road. That's my opinion. I think silver will. Last year it outperformed gold. I think it will outperform again this year. And I think copper is going to be one of those. You can't get copper anywhere. And if you're trying to buy copper, you're going to pay $70, $80 over spot price. Like, it's insane, the prices for copper right now to buy the actual metal itself. So, with everything going on, all the AI data centers, they all need wiring for that. Copper's in every single bit of wiring. We're going to see some really huge opportunities in that space. So, if we leave just one thing with your listeners today, it's consider looking at some of the precious metals. Like you mentioned, the mining stocks. There's so many out there, so many great companies, from the major miners to the little miners, to the upstart miners, to the venture capital companies. There's so many companies in that entire space to research and look at. And I look at them through the lens of, I still want to make sure that they pass our test. Are they a 5-star rated stock in our system? If they are, then I take a position in the mining stock.
Ah, very interesting. So basically, also you're saying that you are using your stock picker yourself as well.
Oh yeah. It's why I created it, so I could make better investment decisions. Yeah.
Yeah, that makes a lot of sense. I'm loving that. So, and what I'm understanding about that, it's called Sterling Stock Picker, right?
Yes.
So, who is it for? And what I'm understanding, it's for whoever is already investing in stocks and wants to become better at it, maybe reshape the portfolio, or whoever wants to get the feet wet and want to have a guideline that is proven and has a higher chance to succeed. And is there any, minimum size of portfolio or maximum size of portfolio this will work for? Or please correct and let us know who this really is for.
Yeah, I mean, wow, it's been 9 years ago now. My partners and I set out to create the software, and we said, if we could create software where novice investors could invest like experts, we'd really have something. And that was our goal. Like, take someone who knows nothing about investing and build a platform for them in 2 clicks or less where they'd find a winning stock. And that's what we accomplished. So today we're sitting with over 4,000 users on our platform. So it's grown a tremendous amount since we started. It's been an incredible journey, and there's no maximum portfolio amount. There's just I think the requirement is someone really needs to have an interest in investing, like really interested, not because their spouse told them to go learn it or, like, oh, it's something they heard and they're kind of curious. Like, I find that the people who do best on our platform really take a deep dive. Like, I've recorded hundreds of videos through the platform to teach people about investing. And when people are really interested, they'll go through those videos, they'll really learn, they'll take a deep dive in the platform, and it'll change their life. So I think anyone who is committed to making changes in their finances, super important. Um, like, I'm a huge believer in personal development and belief system and mindset. I wrote a book about it, in fact, and I've also integrated all of that into our platform so that, we can, like I mentioned to you early on, my biggest hurdle is to try to get people to realize you can get 30% return on your money and it's not difficult. So
Yeah.
once we start with their mindset that way, kind of open them up a little bit to understand that that's a potential for them, then it can get really fun for people because they're like, man, you're right. I get emails all the time from people who brand new investors. Like, one woman emailed me last November and she said, I met her at a conference like years ago. And she's like, hey, I just, I know we haven't talked in a while, but I just joined your platform and I'd inherited 5,000. She inherited 5 grand. And she said,
Mm.
I bought stocks from Sterling Stock Picker and I'm up 30%, just like you talk about. And now I'm going to tell my husband that I joined the platform. So she wasn't going to even mention it to him.
Yeah, that's fun. Fun
Yeah.
story. Yeah, and where would somebody who's interested in checking that out need to go? So feel free to mention the platform itself, and also if somebody wants to get in touch with you personally, what would be the best ways to do so?
Yeah. Right through the platform is the best way. Sterling, like my last name, like Sterling Silver, sterlingstockpicker.com.
Hmm. Sounds awesome, and we're gonna link that in the show notes also, and we're gonna also link your LinkedIn profile as well, in case that's useful. Also, last question. What would you say is the number one stock investing mistake everybody should avoid at all costs?
Whew, the number one. I think the number one thing is that people sell when the markets go down and they buy when they go up. Like, kind of like a FOMO thing. They get like, oh, I gotta, when something's rising high, people know they've done it all at the Bitcoin or even the precious metals, like silver hit $125 or so a troy ounce in January, not long ago, and there was so much FOMO. And I think people have to do their best to um, try to do the opposite, right? Sell when things are frenzied out and buy when, I guess Warren Buffett calls it blood in the streets.
Yeah. Okay. Yeah. Awesome. Jaden, I really appreciate all of that advice, the insights, the stories also that you have left us with. Thanks very much.
Thank you, Robert.
See you soon.
Go to rockandrollyourdreams.com/podcast.